Alright, what's good, y'all? Today we're gonna be going over our weekly outlook, and I'm with my dog Cam. He in the building. He in the building. What's good with it? So together today we're gonna be going over our weekly outlook, and I'm gonna start it off by going over SPY. So here on SPY, we could go to our daily chart, and we are still bullish on the daily. We did have data come out on Friday that sold off the market a bit, but even on the weekly, we're still opening above higher and higher every single day and week. So for SPY, our new levels is pretty much all time highs, which happened Friday. Right here is when we had new all time highs on Friday, and that level is around 652. 652 right when the market opened. We had it SPY open up here, and then we caught some few calls in the Discord, and it started to push down extremely heavy after the jobs came in really negative. So it was kind of hard to catch puts because I don't really like to chase any trades. I wanted a reasonable pullback. If we broke under 650, had a nice pullback, I would have took puts to the downside, but we just sold off too quick and too aggressively for me to just hop on and chase the train. Because let's say we sold off so heavy and you're like, I don't want to miss out. You get in, and what if you got in right at the bottom? Boom, you would have got smacked in the face by it going up. So I'd rather wait for a bounce, a pullback, something. I'm not really chase the trend while it's going. I rather wait for a pullback and get in at a good level. That's how I usually make a good uh like a good A+ trade. You don't want to just start shooting like a machine gun, taking random trades here and that. That's how you're gonna mess up your account and give back gains. So I try to avoid to do that. So with that being said, pretty much all time highs 652 here. We had a major sell off. So what we're gonna be looking at is how are we gonna open up pre-market tomorrow? That's the main question. Are we gonna open up bullish? Are we gapping up or are we gapping down? It all depends what SPY does. But for right now, where it's at, to we're gonna be looking for it to break above 652. And once we break above that, we're in PDM mode. What that means is we're in price discovery mode. We have no levels. Every time we trade from previous price action that happened before. But since we're gonna break new all-time highs. It's pretty hard to find levels and see where it's gonna go when we have never been there before. So that puts us in PDM mode, and once we're at new all-time highs on any type of stock, we want to look for psychological whole numbers. So what that means is like 655 or 660. Those are psychological whole numbers where big institutions are probably placing their buy or sell limits. So that's something we would look forward to once we break all-time highs here on spot. Depending how we open up on Monday, but I'm still bullish, still pushing it to the upside. Just because we had a major sell-off, doesn't mean we're flipping bearish. Even if we come back down to 641, 640 area, we're still bullish on this overall trend on SPY. So definitely, don't get shaked out if you see SPY selling off. Don't think it's gonna go down. It's still gonna keep going up. So we just want to see where our major bounce levels here are going to be on SPY. So what I'm going to be looking for is 644 is a major level I had from the previous week. We took 644 rejections here on Wednesday, and we caught a really nice push to the downside off the 644. But now we broke above, and we're taking 644 into support now. So it was resistance, broke above. Now it's support. 644 support. Even here on this major sell-off on Friday, we wicked under and got bought in back up off of 644. So we want to see if we could hold 644 for more of a bounce play or upside. If we do break 644, we could see if we could catch some puts to the downside like 641.50, 639, even 635. These are going to be my levels to the downside. If we do break up above 648 or 650 all-time highs, and 655 are going to be my new levels here on SPY. So with that being said, let's move on over to the first ticker. We're going to be going over Tesla. Tesla had some really strong bullish news. Elon Musk is getting about $1 trillion from President Donald Trump. Let's see the news right here. Elon Musk news. Right here, Tesla offers a massive $1 trillion pay package to Elon Musk. So he's pretty much getting $1 trillion from his own company. So that's really good bullish news. And you know what Elon Musk is going to do? He's going to reinvest. He's going to reinvest into his company. And that's what's going to push this price up here on Tesla. So right here, we're looking at the daily chart here. We're pretty much in a big triangle formation. So we're at the top here and we're hitting resistance on 355. So this is going to be a major watch for this week coming up. We're going to see if we can break above 355 and catch a retest and potentially catch it all the way up to 368 and above, to all the way to 370s plus. So these two levels I'm going to be watching here. Even if you go on a daily chart, we have a gap fill play right here because of that news we popped up pre-market. So that's something we have to see. We're probably going to get a pullback on Tesla. We're going to get a pullback to this level and then see another push higher, potentially even break, retest, and see another leg up here on Tesla. So we can either come up to this level, reject, come down to this level, and then go up, or we could see a nice breakthrough, a breakout here on Tesla, a major pullback, and then even more push to the upside. So potentially we have three scenarios. We open up, we get a pullback to this area, push back up. We open up, reject off this area, then come back down to our demand, go back up, or we completely just break out pre-market, or when we open, we can't catch the breakout. We can't catch it because Tesla, if it goes, it really shoots fast and hard, but it will also come down fast and hard. So if we open up Monday, we're strong, we're gapping up, boom, first 5 minutes of market, we're shooting, we're breaking above resistance. They're like, oh, let's get calls. You getting calls here. Tesla does a little nice push up and then bam, comes all the way down, stops you out, or even blows your position right here, because Tesla can move really, really strong within a couple of minutes. So you don't want to get caught up trying to chase calls while it's breaking out. Always wait for the break and retest. And when buyers start coming back up, this is where I'll be getting calls here. That nice break and retest. And then we can target these highs and then above to 370s. That's how I'm going to be playing Tesla this week coming up. And we can also look for a bounce here off this demand level. But let's keep it moving. We're going to go to NVIDIA. NVIDIA, I am bearish on. We had some selling off in the chip sectors, and NVIDIA has been breaking down to the downside. We had played NVIDIA a few times here in this consolidation, even catching a few put plays breaking down under here. But NVIDIA has been really struggling to break above this 184 level. It's been struggling multiple times. We've been failing this level here, even here as well. We had a lot of sellers coming in, and now we're breaking down the level all the way down here, and we're doing pretty much of a bear flag motion here, where we break down aggressively. We're kind of having some buyers come in a bit of a consolidation, and now our next target could be another leg lower down to 160s here on NVIDIA. And let me look up the bear flag pattern so I can show y'all bear flag pattern. And this is what a bear flag pattern is pretty much. We get a nice leg down, consolidation moving to the upside, and another leg down. And that leg down is pretty much going to be the same length as the pole. So you figure out the drop right here, you measure that, consolidation. Once we break under this, it's going to confirm our bear flag, which it did right here. It broke it on Friday. This confirmed our bear flag. And now we measured the flagpole, put it here, measure it to the downside. This is kind of how we gauge where our profit target is going to be for downside on NVIDIA here. So we're going to be looking for NVIDIA. These two zones I have marked out are gap fill plays on the daily from last week. So we're really going to watch NVIDIA here, how it opens up next week here. And we're going to see if we could catch some plays to the upside, catching these zones before it continues down. Or if it's going to continue down, we're going to catch puts if we break under the Friday lows here. So pretty much same thing, kind of like with SPY. We're going to look for it to break up to catch some calls into these zones. Or if we break down, we're going to look for the retest for continuation down to 160s. And just know this is not going to happen in one day. You see this took multiple days for this pattern to form. So you don't want to be expecting NVIDIA to fall all the way down to 160, 158 in one day. That's probably most likely not going to happen. So we have our levels set. I'm going to set alerts. We're just going to see how price action comes in on Monday. And we're going to see whether we're going to take it to the upside to catch these liquidity zones, or we're going to break down all the way down to 160s. We're going to see which way NVIDIA will go. So next ticker we're going to be looking over is AMD. And AMD is very bearish here. You can see we had major selling off here on AMD. And we also have a little gap play fill right here on the daily, and it's finally starting to come down. So usually every gap it does on the daily, it usually gets filled. As you can see, we had a gap here, it got filled. There's a few gaps AMD have filled. So this is the nearest gap AMD is heading towards. So this is what we're going to be looking for it to fill this gap and then potentially bounce or break down. Once we break down under 148, we pretty much have not too many zones in between 148 to 142. So if we do break this level, I will be looking for aggressive selling all the way down to 142. But this is a good demand zone. So just because if we come down to this level, don't take puts. You want to wait to see for it to break and confirm or give us a bounce play that we can take some calls to the upside. It's all about waiting for your levels to get hit and then wait for confirmation for either buyers or sellers stepping in. Once you see one side taking over, then you want to hop in and join the trend on whatever side is taking over, whether it's the buyers or sellers. I cannot predict where it's going to go. I don't know where it's going to go, but I simply have my levels placed. Once we get to levels, I watch for a reaction, and then I take it depending on price action and who's winning the battle on either side. So we're going to be watching these levels here on AMD to see how it moves. Let's go on to Apple here. Apple is surprisingly really bullish in the market. While we had a lot of selling off going on, especially in the chip sectors, Apple is pushing up really strongly here. We had a nice break and retest here on this major demand level, and now we are pushing up strongly here on Apple. So Apple, I'm looking for a pullback to 235, either 235 to 231 pullback this week for more upside, or simply we just break above and look for that breakout play here on Apple. And Apple, while NVIDIA, AMD, all these chip sectors, they're at all-time highs. Apple hasn't hit all-time highs since December of last year. So Apple still has some moves to the upside before it even breaks all-time highs. So definitely we could catch a pullback to the previous resistance level, turn to support. So that's 235 here on the larger time frame. And then we can catch Apple to the upside, or we can even catch that 241 break. That 241 break, and we could mark out these next zones here for profit targets. But Apple is very bullish. It's going to be on my radar. We're going to see if we could either get that pullback or breakout here on Apple. These are my levels. And yeah, let's keep it moving. Let's go over, I want to go over a swing play that I'm currently in, and that is Duolingo right here on the daily chart. We came back down. We have bullish diversions where the stock is moving down while the RSI, relative strength index, and MACD levels are pushing up. So that's pretty much indicating that we're going to have a good bounce here, and this is a previous bounce level from earlier this year, March and April. So not only that, we have more than two confirmations that this stock is gonna potentially rip up. We have bullish diversions, RSI MACD level, and a strong support zone right here. So I'm currently in this swing. I have a couple months out, so I'm planning to hold this swing, and I'm pretty much gonna see how far it's gonna go, and I'm gonna just keep my stop just a break under, 260, 255 around this area. So if we start to dip under these zones, I'll just simply stop out. But the risk to reward ratio is pretty high. You can see Duolingo popped a few times. So let's see. We're gonna be looking for a pop here on Duolingo to the upside, potentially catch a really good swing on this. And let's see, let's go over another swing that I'm in also. Currently, I like Lyft a lot. Lyft is pretty much a good company. They're kind of copying Uber's model, so they're just becoming profitable. You see, they kind of sold off a bit since they first started, since they IPO'd. They have a major gap fill here, all the way up to 30. So even if you don't get a option contract, you could literally buy shares. Like I'm long on Lyft for the long term. So you could literally buy shares here at $16, and you'll for sure double your money within the next year or two, all the way up to this 30 level plus. So I think Lyft is really good. We had a bearish trend line that we're starting to break and retest. So I definitely would take a couple swing calls here. That's a couple months to even a year out on Lyft, and just ride it all the way up to this zone and take profits along the way. I really like Lyft to the upside, and yeah. So I went over my main tickers, my two swing trades. That's pretty much what I'll be going over today. Now we're gonna be going over to my boy right here. He's gonna be going over gold. I'm gonna join his stream right here. Yeah, he's gonna hop on and talk to you guys about gold coming up.
All right. So I hope everyone had a good week trading last week. What I can say is Friday was very eventful. We had NFP come out, and that caused a lot of volatility in the market, as we saw on Pat's side with the stocks and on gold as well. So as we see, this is Friday's candle. We hit an all-time high of $3,600, and at the same time, we broke up past this whole zone of consolidation here, and this was going over like the past few months. So this zone, price came here in April, hit all-time highs, and then started consolidating in this zone for the next few months after. Now we have finally broken out to the upside, and now what we have to do for the long-term swing is one, to wait for structure to hold and come back down here, test this area, the top of this consolidation zone, and then continue up. Overall, gold is still bullish on the long term. I don't see gold falling drastically anytime soon, if ever. With everything going on in the economy, we have the dollar losing massive strength. The dollar broke through significant levels of support and resistance, and now that it's broken to the downside, we see all this negative pressure on the dollar and on the economy. Jobs came out with the NFP report last week on Friday, and we actually saw, let me check the news here. We saw 22,000 jobs reported in August, with what was expected forecast of 75,000 jobs. So with that low hit in jobs, that caused a massive decline in confidence in the economy, which shot gold up crazy. So we just go on the 4 hour here, and we saw NFP came out, released around 8:30 on the East Coast, and that caused massive buying into gold here. So now we closed the market on Friday. We saw some selling pressure here as we topped $3,600 per ounce on gold. And then now we're just kind of waiting to see how market opens today and tomorrow, and we'll go from there. Like I said, gold is still overall massively bullish, but we still need structure to hold, and that's where we follow when we place our trades. So looking at my levels here, we have past resistance that was set last Wednesday here at the top of 35.75 psychological level. We saw on the 15 when we broke here, we had consolidation here, and then we came up, impulse up to the upside, came back down, tested, held that support that was once resistance, and pushed up to new highs as NFP came out, and we had reaction off of that news. So now we have these sellers coming in, we have buyers taking profit here, and then market close. So what we're waiting for is, one, we could see continuation upon market opening to attack 3,600 and continue on, or we could see, as we see these sellers coming in, we should see more sellers coming in here Sunday, Monday, come back, test this, and then we push above to the new highs. Also, what we could see is a breakdown past this level to set into this area. The reason why I have this red zone here is that we are still in bullish structure. So even though we see this and we're coming from highs and sellers are holding pressure, we might want to be risking sells in gold, but that's a riskier trade because structure is still holding. We're still in bullish structure. We had this leg, we had this impulse here, came back down to discount, and now we pushed to like, now from the fib, we hit discount perfectly and we pushed out. We still had not hit the first target. We hit all-time highs, but the first profit target was not hit. So this trade, this move here is still in effect. So with that, it would be risky to look for sells in this area anytime soon to go back down to the downside since we are still in this bullish structure. So what would be the smartest thing to do is wait for market open. Ideally, if we want to catch some trades on Sunday open or Monday, we could wait for the move of breakdown, test this area, and then catch buys up to that profit target before looking for any sells. The only reasonable area to be looking for sells is if we break back down and start making new structure below this level at 35.25. This is where we will ideally want to be catching sales because now structure has been broken and now we're setting new trends to the downside. And if we're looking for sales on the swing, we would want to target the level of this breakout. So this breakout happened at 34.30. We would ideally want to sell to this level to then see if price holds above for that next swing up. So ideally, it would look like 15. We break down. We would not want to be looking for sells here unless you're taking very short-term scalps to this level, then to this level, then to this level, then to this level. That's the only reasonable play, but for swings, we are still bullish. So you would want to catch these buys or wait for that longer-term swing, wait for price to come down, break, retest, and then continue down, and then you would just place your shorts here. Stops above this level since this is going to be that support resistance zone, and then you sell down to that last area where that breakout happened, and that's your trade right there. That's your swing, and that's a 1 to 8. Ideally, obviously it's not going to be this perfect. You would look for the proper structure and in alignment to other confluences that you will find to make that trade, but ideally speaking, this is what it would look like. So right now we're just at wait and see. Every market open from any crazy trading that happened on Friday, between Friday and Monday, is you just really want to wait and see because it is very risky trying to trade on open on Sunday, because what I've noticed a lot, Sundays market will move in one direction and then correct itself overnight to then make its real play for Monday, Tuesday. And then that's when you see that real direction for the week that will appear Monday, Tuesday. So what I'm thinking is we get market open at 6 in about 30 minutes. We get market open. Impulse happens. We either get a gap up to hit this target or we get a gap down to test these areas, and then buyers will come back in at discount because they're always looking for discounts. When impulses happen, when you get these moves, you always see price correct to a discount zone. That 50 to 61.8% zone, that gold zone in your Fibonacci, is your discount zone. The institutions, the banks, you will notice they trade at psychological levels. So these whole numbers, you get 35.25, 35.15, 34.30, 35.75. These are all psychological levels that institutions, the ones who are actually moving these markets, they like to trade to, because when they're doing their paperwork, they don't need these extra numbers on their ledgers. They keep whole numbers because it's easier for them to keep on their books. So when you understand that, you target those levels and you wait for reactions at those levels. So knowing that, when you're looking for your patterns, you look for specific areas where there's massive rejection, massive reactions at, and then that's where you mark your areas. Then from there, you will notice, okay, boom, you get an impulse, you get a pullback to this exact level where it's also that discount zone. You buy, boom, that's your next leg. Now, with your fib, you have your extensions. Those are your major profit targets. So if this has not hit, but you see this buying impulse here, you know they're aiming for that target. That target is also sitting at the 3610 psychological level within that area. It will hit before it makes a rejection back down or it breaks through. So now that you understand that we're in this bullish play right here, you're either going to wait for a low risk position to get in to ride that wave, or you just wait for a real structure to form to where you're like, okay, I missed this opportunity, I'm going to wait for the next one. So here, if I get a rejection, if I see market opens, price comes down to this area to test, and we get a rejection off of here, I'm getting in buys. It only makes sense. I'm going to target this green area and get in buys here at this rejection. If we get a breakthrough, then I would wait to see what price does at this level or at this level. Patience is the biggest thing in trading. And if you're not able to be patient and wait for the right trades, you're going to be chasing shit. And if you're chasing something, that means it's running away from you. You're not going to get it. So you wait for price to come to where you want, where structure is literally showing you that it's respecting, and you would just wait for those positions. You get in, and then you have your targets to where you're targeting for your long-term swings or for your scalps. It works the same way. Structure is structure, and you want to respect it. But yeah, that's pretty much my play for the rest of the week. We have not a lot of crazy expectations in regards to news this week. We had NFP come out on Friday, and that's like the biggest news that will come out every month outside of interest rates, which is on interest rate decision will come out the 17th, which is in 2 weeks. So in between NFP and interest rates, it's just regular movement in the markets. With gold specifically, though, we have to not just only take U.S. news into consideration, but also countries that have big trades in gold. So China, for example, Australia, for example. Australia is one of the largest producers of gold. Any news that they have come out, any news that China has come out, you want to pay attention to, because those also makes moves in other sessions as well. With gold, outside of options, with Forex trading gold, you have access to trades 24/7 basically. It's 23 hours a day. It's open outside of market closing on the US side. But you have news coming out all over the world, all times throughout the day. So you want to pay attention to those to know what's happening, why gold is moving the way it is moving. But understand that the U.S. economy is the largest influencer of every single market in the world. So understanding that, obviously you want to keep an eye on what's happening during New York or U.S. trading hours. But you also want to understand that there's news happening all over the world. And that also affects gold. That also affects stocks and how they move. That also affects a lot of things. So you want to take those things into consideration. Pay attention to your fundamentals. Read your news. And yeah, just be patient. Wait for your setups. If you're strictly just sticking to technicals, then have your levels. Respect them. Wait for them. And then place your trades. Trading comes with risk. You have to be able to risk and you have to be understanding that there's a possibility I will lose in this trade. So that's where it comes to your management, managing your account, managing your funds, and just being very respectful to your account and to your trades. But outside of that, that's pretty much all I have. It's a pleasure being able to have a brother like Pat that is in this as well, to where you can bounce ideas, you can have the ability to to mastermind and brainstorm ideas when it comes to trading. This is a very vast world that we're in right now, from options to forex to cryptos. There's so many different ways to make money in this industry, but once you understand technicals, once you understand that it's just pattern recognition and just being able to manage your account responsibly, this game is very opportunistic, whichever thing you're trading. So yeah, that's pretty much all I have. I'm gonna bring it back to my boy Pat. Have a good week. Hopefully we all come out profitable.
We're gonna kill it this week. Come in here, kill it, make some money, man. This is a lifelong skill. It's a high income skill, man. Take this shit serious. Study it. Don't just try to, just try to copy trades or nothing. Just study this shit. Take your own shit. Manage your account. And don't try to get rich quick. This is not going to make you rich quick. You're going to blow your account trying to get rich quick. The slower you take it, use risk management, proper setups, and just don't worry about the money. Worry about taking good trades. That's how you build nice wealth in your account. And remember that. Don't try to get rich quick. Don't think about the money. Think about the percentage and the trades you take. Peace out, y'all.